Welcome traders to this video where we're going to be looking at 7 tips on how to be a successful prop trader. So tip number 1 is going to be develop a plan and be strict with it. So you should always build a set of rules in preparation before you actually start trading. A lot of traders actually just get involved, they jump straight into the market, they might jump even straight into a prop account without actually thinking about the longevity, the long plan of exactly what they're going to be doing, what trades they're going to be placing, what currency pairs they're going to be using. You need to think about, be critical with yourself and understand exactly what you're going to be trading. So the pairs that you're going to be trading, the amount of risk you're going to be applying, the time frames you're going to be looking at, and the amount of time that you're going to be putting in terms of effort into your trading. So then once you've actually got the plan and you understand exactly what you're going to be doing with your time in the market, then you shouldn't really be results orientated from the start. On a short-term basis, win or loss, on a trade-by-trade basis, you should just really stick to the plan and not really concern too much about whether one single trade is a win or a loss. And yeah, that brings me on to aim for trading volume, and what I mean by that is a large number of trades. Obviously traders are going to be different. Perhaps you're going to be placing 1 to 4 trades a week. Perhaps it's even 4 to 10 trades a day. Obviously many trades are different, have different styles and different amounts of time that they can actually implement into the market, but nevertheless you should always look for a lot of volume over a given period of time, a week, 2 weeks, a month, before you can actually start analyzing any of the data or any of your actual skill set as a trader, as just one trading day or one single trade. Yeah, it doesn't really show you much clarity in terms of profitability or anything like that. So you need to build a bigger volume of trades to actually learn from. The next tip is always set a stop loss for your trades. Now if you're trading on a prop account, then realistically this should be up to a maximum of 0.5% of the account balance. So the reason that we say this is that it does allow for more trading volume, given the actual drawdown limit. Let's say for example for FT UK 5%, 0.5 is a very maximum, is still going to give you a number of trades before you reach the maximum drawdown limit if you was to go on a significant losing streak. However, even go below that, we've seen trades go 0.1, 0.2, and even below that as well, depending on the account size and their situation scenario that they've found in the market. And only look to increase your lot size as your account size grows. Okay, so always earn the right to trade bigger. Don't jump in with high lot sizes and then try and use low lot sizes to build up, or start trading properly after you make a win. Always try and trade properly and reward yourself for trading properly, i.e. start small and then increase your lot sizes as you go at a marginal rate. Don't just jump high, just increase them very gradual, which will, leverage your success and the positions that you actually can see in the market. Now the next tip is probably the most difficult in terms of how we can actually apply them to ourselves, because it is so difficult. And it's never try to compensate for trading loss. Now losses are always going to happen. I think we're taught that pretty much from an early stage, whether or whichever way you actually find your way into any of the trading markets, you will come across the fact that we are going to be losing, whether you face that on your own or face that through some information online. But actually putting that into practice can be very, very difficult, because when we actually do experience a losing trade, we want to quickly get back into the market, or we might feel the urge to try and get that loss back as fast as possible and then potentially go into profit. But yeah, so when you do take a loss, the best approach is really just to close the chart and return the next day with fresh eyes. If we do that, if we can actually discipline ourselves enough to do that, correctly, then it will make our lives much more profitable, our trading systems much more profitable, and we're going to be able to trade with much more clarity. You know, if you come back the next day, you can see what's actually happened. You know, if you're trading on the 4 hour, on the hourly, just give yourself the next 6, 7, 8 candles just to see what happens. And you know, perhaps it might have gone in your direction, perhaps it might have gone into a lot more potential loss if you was to get straight back into the market. So just try and discipline yourself, and if you are finding that difficult, then really you need to start making even preparation and plans for potentially what could occur there. Now, realistically, if you are using very low amounts of losses or potential percentage losses on each trade, then this shouldn't really affect in terms of emotional impact. You know, if you lose 0.2% on a trade, then that can be a lot easier to handle than, let's say, losing, I don't know, 3 or 4% on a trade, where you might want to try and get that loss back because it's a larger one. So if you try and minimize the losses, then it can be easier to just step away from the chart after you've taken that trading loss. So the next tip is to never force a trade into existence. Always trade when it feels like the right moment, and make sure that it does fully comply with your trading plan. Now, as mentioned in the start of the video, we do need to make sure that we are using a trading plan in place, so that we actually eliminate any of the emotions, and we have a rule book to follow by. And that should be the case even when you're actually identifying trading entries. You should have a set of rules or a list of requirements for you to actually find legitimate opportunities into the market, such as, you know, finding, let's say for example, 3 reasons or confluences why you should enter at that position, maybe 2 reasons for a stop loss, 2 reasons for a take profit. This is just an example, but make sure you have like sort of a to-do list of exactly what you want to be looking for each trading opportunity. You know, it doesn't matter if you are trading short-term or long-term. If you put enough effort into your preparation for an actual trade entry and execution into the market, then that's going to help you massively. If you are just opening MetaTrader on your computer and you're just purely clicking buttons, buy or sell, without any kind of theory or method behind the actual trade, then it's going to be very difficult to understand where you're going right or where you're going wrong. Because if you win a trade, then it kind of just disappears from your memory. If you lose a trade, then it might just force you straight back into the market. So having that kind of preparation and discipline behind the actual trading setup is going to really help with your longevity and actually becoming a better trader and learning from your experience, which is crucial in this market. So always try to achieve more profitable trades over a large sample size and less unsuccessful ones. Now this does sound quite easy, where, you know, it is difficult. Obviously we do want to make sure that we're trading with the correct risk so that we can actually see this volume in place, and ultimately when you are looking back at your trade log, your trade history, you will see trading losses in there. So the fact that, you know, if we can try and cut those short, or even just basically decrease the losses, decrease the size of the losses and the amount of losses, is going to effectively increase the amount of profit over a long given period of time. Now, whilst that does sound easy, in the moment it can be easy to you know, slightly put a little bit more risk into a trade or extend the amount of risk that we're putting on a trade. But if we can try and think about that, you know, monthly statement at the end of the month, or you want to look back at 2 months, 3 months worth of trade data, then try and make your trades fit in alignment with your long-term plan. And by thinking that way, by thinking more long-term, even when you are opening and you can see a live position running, you want to try and think about how that impacts the long-term and the longevity of the account. If it is a losing trade, then try and get out as quickly as possible. it is a winning trade, you do want to try and bank it at a certain time. You don't want to just let the trades run forever, because a lot of people actually don't might not look to put a take profit in, or just bank the profit using their stop loss. However, we do want exit points. We do want to reward ourselves for trades going right. If we believe that a certain pair is going to 1.100, for example, and we're sitting at 1.50, and we actually see the trade go to that level, our target, our destination zone, and then we want to reward ourselves for that. So we want to be banking that profit where we can as well. But yeah, just try to achieve more profitable trades over a long period of time. Now, with all these tips in mind, the next tip is you do want to test your methods on a demo account with a decent sample size. Now, what I mean by that is demo accounts are free to open. You can actually test yourself before actually joining a prop firm. You can just open up a similar size account with a similar leverage, and you can actually look to implement a sort of test for your own ability, test for yourself whether you actually feel like you could actually sufficiently pass the profit target on a prop firm like FTUK. But when you are trading on a demo account, you want to trade with a decent sample size. So whether that takes you a week or a month or 3 months, looking back, there's many traders that have come to us who have jumped straight into a live proper trading account, and maybe they've reached the maximum drawdown limit, or they've violated a trading rule, and essentially they just kick themselves for not actually putting in the preparation and trading on a demo account, which can save you a lot of time and money if you are actually looking to learn or try and see whether this is something for you. So open up a demo account, get a decent sample size of trades, get a nice volume of wins, losses, how you've actually experienced the trading conditions and your trading environment, and just see what happens over that given sample period. And if it is working for you, then definitely try to look to implement more of a live account, or join a prop firm to actually try and leverage your account and leverage your career a lot more. But yeah, just open up a demo account and placing 1 to 2 trades that are winning trades isn't really going to tell you anything. You really want to be trading it like it's a real account and treat it as if it is real money, even though it isn't. And the final tip for this video is, if you are a profitable and experienced trader, then make sure you join a prop firm like ours. Join FTUK and you can make accelerated growth on any account. We have a range of programs on various different account sizes, with a valuation model and also an instant funding model where you actually can earn from day one. And yeah, feel free to check out the website and use our live chat if you do have any questions, and I'll see you in the next video. Trade safe.